Good afternoon. This is Brad Dennis with BIS Commodities with your market wrap-up for the week ending November 2nd. First off, corn and beans. Basically what we've been doing for the past 2 weeks. We're trading in a range, and we continue to trade in a range. Corn's a 732 to 770 range. March beans are $15 to $15.45. We haven't been able to break out of that range, and once we get up there, we do see a little bit more selling down on the bottom. We just haven't seen anybody try to take out the downside yet. Wheat was interesting today. It led corn a little bit higher to start off the day, and then it backed up. What we're looking at is wheat is Informa came out with some lower numbers, and traders felt that that was a buying opportunity. Actually, wheat had the best close for the week out of all the grains. Interesting scenario has been going on in the grains, whereas at the beginning of the week we did see a little bit of a risk-off trade on Monday. Nobody knew what was going to happen with Hurricane Sandy. They wanted to pare back their risks. After the hurricane went through and traders were allowed back to trade equities and others, we saw a little bit of a rebound there. But then today we come in and we do see, the export sales for corn being just 167,000, and that weighs on the market. That brings us back down to the lower end of the ranges. As I mentioned before, Informa came out with some numbers. Last night we did see some FC Stone numbers. FC Stones were slightly bearish for corn and beans. Today Informa came out and they had a 38.6 yield for beans, up from 37.8. And then in corn, they raised their corn yield from 122 to 122.4. So those weren't as bearish of numbers as traders had expected. But in the end of the day, we weren't really trading, what Informa told us about. We were looking over at the macros, and we were looking at the dollar. Bottom line is risk-off trade today. You had gold down substantially. You had crude oil down substantially, and that's what pulled our corn and beans lower as well. Non-farm payrolls at 7:30 this morning came in at 171,000. Traders were expecting a 125 figure. So it's that old trading thought that better numbers mean less stimulus impact. And with that less stimulus impact, you're going to have the markets pull back with the Dow over 100 points lower right now. Like I said, crude down over $2 and gold hitting lower prices as well. Also this week we did see China's Purchasing Managers Index, and that was on the rebound. Last month it was down to about 49.9. This month we're up over 50, which shows expansion, which is definitely positive, and traders are starting to think that China is digging its way out somewhat right now. Realistically, what we're seeing also is positioning ahead of an election. Tuesday, thank goodness we're going to have the election and get that out of the way, and we have two different parties with two different programs out there. So once we get through Tuesday, and heck, we might not even see the results until Wednesday. For some reason, I think it's not going to run as smooth as people anticipate. But once we do get those election results, then money managers can throw what they want in their growth models, and we can kind of go from there. Metals, like I said, gold shot down. December gold hit its 100-day moving average, well, about 1574, or excuse me, at 74, with 1671 being its 100-day moving average. So, better consumer confidence this week, better economic data out of the U.S. Once again, those better numbers mean less stimulus. Less stimulus means a little bit stronger dollar. Stronger dollar is pointing towards lower prices for commodities. Moving forward, you have to look at those ranges. If you're looking at the grains, you have to look at that 32 level in D's corn. Should that be given, 705 is definitely a possibility out there. And even though we do have that lower supply issue going on out there, it doesn't matter right now. It is a technical trade, and if you break out of the ranges, the technicians will run with it a little bit. So that's where we're at for the week. Looking forward, it's all about the election and taking out the ranges. 100-day moving average in your gold market, you want that to hold up. Otherwise, we're going to have a little bit deeper correction. We'll have to look at the fibs on that. So that is your update for the week ending November 2nd. And we'll be back next week after the elections and see how that impacts the markets.